other one is Lofty and Propi. So those are two companies, super interesting ones, because they are tokenizing real estate. And the problem of real estate and tokenization is that 99% of the companies that were doing this in crypto were doing this wrong. Why? Tell you, and we will try to speak about the future of finance and how RWAs will change, how RWAs might improve, and how RWAs might help DeFi to grow and crypto industry in general to expand much more than we are right now. So my name is Paweł Łaskarzewski. I'm the CEO of Nomad Fulcrum. It's some are saying inflation-resistant stablecoin, some are saying tokenized hedge fund. So I will start with giving a little bit overview what RWAs are. Probably you are familiar with that statement. RWAs are real-world assets. And most of the people think about RWAs in a way that those are financial things, stocks, like contracts, bonds, this and that. But this can be everything. This can be a building, grains, land, basically anything that we can somehow tokenize and that might generate some kind of positive profit in the future. Like this room might be an RWA, this water as well, different things. This water maybe not because it's not generate any kind of APR, maybe. So combination of DeFi and RWAs, in my opinion, will gonna build us a better DeFi in the future. And I will try to answer during this conversation, hopefully, why. Why I think that combination of those two completely different worlds as for now. Because right now, what keeps crypto and traditional financial markets together? Global economy and dollar. That's it. Nothing else. Because those are two separate worlds. But they might be connected exactly through RWAs. And we have heard even about a couple of companies like that. Like stablecoins, those are RWAs. They are backed by some sort of traditional market assets, like some sort of stable, like Tether. Yeah, so not always, but RWAs are there. They have some assets underneath. So while speaking about the DeFi and better DeFi, we need to start from the analysis of the issues that we have in the market. And one of the biggest problems of the DeFi sector is right now that DeFi focuses on concentrate only on crypto. It not concentrate on different things. Like we are in the bubble. We say everyone from the outside of our bubble is a bad person, like they are corporates or something. But at the end, like crypto is like that, and the whole world is like this. You know. So I believe to not circle around the same faces, the same companies, the same capital all the time. We need to expand. We need to think differently. That's why also those regulations are stepping in. We can think about regulations as a bad or good thing, but pragmatically, they're going to be here. We will not change that. So pragmatically, if we are building any kind of business, we should apply those rules to us. So starting with this, I will try to go through the main issues and main problems that we might see during working with DeFi, or we have seen in the past while using those protocols. And I will start from something that crypto was meant to solve, and we are still speaking about the issues that we have. So lack of transparency, like in terms of USDT. They are saying that there is something that is covering all the Tether minted, but we don't know. They are promising us that, but we don't know at the end. There is another problem, lack of reserves, like in algorithmic stablecoins. So we have seen a lot of algorithmic stablecoins that collapsed, that depegged, that had any issues because of the structure they had. And one of the very good examples is Luna. Luna USD has been backed by Bitcoin and has been backed by Luna itself. And it was algorithmic baked to those two assets, and it collapsed at the end. So moving from this is leading to the major problem of DeFi. It's vulnerable for economic and security attacks. More capital in the crypto has been lost ever in those kind of attacks than in scams, in hacks than in scams. Scams are less risky than DeFi was. Like every month you hear 100 million, 200 million, 300 million capital has been lost. And that's a big problem because of the structure of most of the different protocols. So moving from there, the structural problem is that we are trying to secure one asset with another asset of the same class. So one crypto secured by another one. So what can go wrong? So in Luna, we have seen what went wrong. So Luna collapsed, USD collapsed, everything collapsed in this ecosystem. We also have seen the same problem in the financial market. Have you watched The Big Short? So everyone probably, yeah. So in The Big Short, this is the exact problem that happened during 2008, besides over leverage positions and everything. So in 2008, probably as you watched The Big Short, there was this girl who had, the street girl, who had 5 houses. One was collateral for another one, for another one, for another one. So besides over leveraged position, she was using assets of the same class to secure assets of the same class. And that's a problem, because as you can see, in the crypto we have those over-leveraged, over-collateralized loan protocols. So you are providing 150% of the collateral of the capital that you are borrowing. You are borrowing 1 Bitcoin, you need to provide the value of 1.5. Why? Because the market is volatile. So once Bitcoin is going down, the value of your collateral is going down. So that's a problem. And that's why every couple of years, once we have a bear market, we see all those headlines. Massive liquidations in crypto. People lost billions of dollars because Bitcoin went down. Because the whole crypto is relevant on the price of Bitcoin. So as we have 70%, 80, 60% of volatility on this collateral value, why we are using this as a collateral, which is basically unsecured. So why not to use some sort of assets that are tokenized and I bake to some real world things, which is a different type of asset, which do not care about the price of the Bitcoin. And that would be much more secure. And probably we could even increase the capital effectiveness. Because right now, as we need to provide 150%, it's like a very big capital ineffectiveness. So what if we could provide 110% and with less risk? And I will tackle this topic in a second. So this is exactly the thing that I told you about. So big capital ineffectiveness. As we have this 150% requirement to provide collateral because of the 70% volatility, this is basically covering like probably 80% of the risk, the collateral, additional. What if we can provide an asset that have 5% risk and then ask for 15% collateral on top of that, which is 35% less, but is 4 times less risky because we have 5% risk, not 70%, and we provide 15% collateral, which is 300%, and not 70. So this is much more secure. So I believe, that's my bet, that the future world is going to be a combination of TradFi and DeFi, and those two things will going to combine together and mangle in some sort of, mutual protocols that are going to be used also by institutions, as regulations are also in place, almost like Mika, Dora. There's a special type of token, Mika. Have you heard about that? That Mika is solving security problem. Like so far, everyone tried to be not security, but utility token, even that they meant to be security because of some underlying assets that have some value or something. So Mika is providing a new asset class. It's named ART, Asset-Related Token, which is removing all the burden of the financial market, because being securities is to apply all the financial market rules. So once we're going to do that, we need to have a lot of capital to fulfill all the compliance requirements. So we are done. Probably our company will never start with that, because we are startups. We are entrepreneurs with a low amount of capital, not hundreds of millions. So Mika is solving that by providing this ART, which is much more lightweight but also providing some sort of security for the end customers at the end.
So I have a question. You have to have like 300,000 euro for this.
What's that?
If you want to issue this type of token, you need to have base capital in the company like 350,000 euro.
Yeah, if you want to provide financial services, I would say that's a fair thing.
No, like if you want to register this token as official thing, you must be electronic money provider.
No, that's not true. I will tell you about this. Let's tackle this topic during the Q&A. So I'll tell you why this is not true. It's enough to have, for example, asset management license, which in Switzerland cost me personally, because I'm doing this right now, 20,000 francs. And it's financial institution as well. It's regulated under the FINMA in Switzerland. And we can issue something like ART. You might maybe speak about some other requirements from other countries, but MiCA is not implemented yet. There's no country in Europe that implemented MiCA. MiCA is just a draft that after some time is going to be implemented. But let's tackle this topic later on, because that's a good topic. So, as I told you, lack of stability, high volatility, low liquidity. That should be probably in different order, because of low liquidity, we have high volatility, which results in lack of stability. So that's how it works, and those things are might change while the big capital and financial institutions will step in, and when regulation will show up. Because right now, if you are a hedge fund, if you are a big company, and you want to put 100 million into crypto, you will ask yourself, what kind of security measures do I have? Okay, if I will put this into DeFi protocol, which are subject of being hacked, I don't have anyone to sue or to ask for. If this is going to be a rug pull, I don't have anyone because there are no regulations. So in the future, once regulations will step in, I will check if the project is regulated in the first place, if they want to provide any kind of token. So then I know who is a UBO, who is responsible, because at the end, if we want to build business, we need to be responsible entrepreneurs for building something. So we can build like scams or withdraw, you know what I mean. So that's why I believe those things, once more capital will step into crypto, we will see bigger liquidity. Bigger liquidity on the market is smaller volatility, which is much more stable market. And we can see this, for example, euro dollar. You can see there are trillions of dollars, and if the currency like euro dollar is moving 5%, everyone is shouting that the world is dying probably, or something big is happening. Because there are very small price movement because of the liquidity that there is on this market. And I believe those DeFi services in the future are going to be the main solutions that will be used within financial institutions. Because they are providing and solving a lot of problems that I will tackle also later on that are in the financial sector as for now. So, one of the most beautiful issues in the crypto is APR. Where the APR is coming from in the crypto. In most cases, it's printed. We know that Fed is printing money. We know what kind of result it had on the dollar. Since 50s, it depreciated its value by 95% or something. So the same thing is happening in the crypto. But the issue is, in the crypto, it's happening faster. That's why every chart, most of the charts in the crypto look like that. Because people are giving away free tokens, which increase inflation, which depreciate the value of that token. So there is no real economy around that. There is no real yield that is generated by the profit of the company. So another element in here are over leveraged positions as well. So we put capital into one DeFi protocol. Then we get LPs. Those LPs we stake in another protocol as a collateral to get another capital, and then we have a chain of 5 different, protocols that meant to generate something. But once the very small price movement, everything is being liquidated, and that's a problem of being over leveraged. So RWAs are solving this highly. Because as we have those RWAs, as we have, let's say, hedge fund tokenized, or as we have tokenized yield from the building rental, because those kind of projects are in here. Then we have real yield generated on the real work, on the real capital movements, not on something artificial, printed, given away, which increased inflation, which is always a bad thing. As we know, the prices are skyrocketing all over the world, so the value is depreciated. So that's also another issue, and this is the place where RWAs might help us with a lot. So the last of the problems that I will tackle today is regulator uncertainty. Like, as I said, it might be bad or wrong. There are different opinions. We can go out, all of us, and protest. We don't want regulations. We will not change anything. Regulations will step in. They're going to be here. So the main issue that I see right now is that as I'm starting my business and I want to be regulated, I have to be, because that's a pragmatic thing if you want to run a business. So the problem is I don't have clear rules what I can do. So I will start a business. I'm going to be successful for the 3 years, and the 4th year, regulator will step in, provide a new law, and he will say, "Bravo, you are against the rules. You do not provide services that are compliant with the current law. You need to close the company." And that's a problem. So that's why providing any kind of rules, bad or good ones, is good to have as early as possible in development of any kind of ecosystem. Because otherwise, once you spend a lot of time and money to build your business, then you're going to have a problem. That's a pragmatic approach, because, you know, in the future they might change something or implement new rules that are going to be against something that you do. So that's a big issue right now, but hopefully MiCA and other regulation will step in soon, and we will have very clear rules how to behave on the market, what to do, which will simplify our business or make it a little bit harder, but we will know if we can, you know, execute our idea. So, why RWAs are crucial to the development of DeFi? Simple. So, right now in crypto, we just use crypto assets. We use one crypto secured by another one, as I told you before, which is a problem and which is a structural problem of the whole ecosystem. So, while using that, we will provide much more stability to the DeFi protocols. Those protocols which are going to be much more stable because of the collateral value. So that's one element. And another element why those RWAs are also crucial is to remove out of the equation those printed out of their APRs, to start based on the real cash, on the real money, on the real value that is being generated for providing profits, for building profitable companies. Like, main problem of crypto, have you ever seen a successful crypto company that is generating a big revenue stream? Okay, profitable, okay, the one that is paying dividend. Like, no one is using those words in the crypto. In the crypto we are using, you know, staking, shit like this. We do not speak about profitability and making business to generate money. That's the problem. And that has to change, and that's why RWAs and the product based on that might help us a lot. So that's why I believe into that. And also, from the other angle, we can change with DeFi and RWAs a financial institutions a lot. Why? You know what caused the 2008 crisis? So you watched this Big Short movie. So they were taking mortgages, packing this into packs, into financial products, and selling on the market. The main issue was that they were saying that those assets that are in the package are valued in here. And over the time, those assets were depreciating its value, but they were still saying it's here. That's the real value. And it was slowly depreciating its value over time, over and over. And when it's reached this level, they said, yeah, we were wrong. Bang! In 1 second, the whole market collapsed. GFC, Great Financial Crisis. So imagine doing this in crypto. Who's gonna provide the information about the value of products underneath of RWAs? In traditional market, those are doing trading agencies. In crypto, this kind of work is done by oracles, trusted partners, decentralized network. So there is no way to fool thousands of nodes worldwide. If someone is trying to do so, they are losing their capital, they are staking while lagging a node. So this is how we can provide some portion of transparency, some part of transparency to the, from the DeFi, from the crypto world, to the financial world. Another thing is, you all have bank accounts. You have money on your bank account. So bank is providing lending to other people. Whose capital they are borrowing? Theirs or yours? Of course yours. They do not put risk on their own money. So as they are borrowing your capital, we have a problem. Which one of you ever had a call from the bank with a question, "Hi, Pavel, can we borrow your capital to another company or for someone?" No, because they can do so. And this is the only reason why bank guarantee fund must exist, because of the irresponsible lending policies of the bankers. So what if we can replace this kind of work by the smart contract? So if I want to put risk on my money, but I want to have an APR, I can agree on my capital to be borrowed to someone else. And this is my risk that I'm taking on myself. Okay, so if I can do so, there's no need for bank guarantee fund, because I'm putting the risk on myself to borrow this for someone else. And then all the remaining capital that is in there is not touched. So we can provide a lot of different solutions that we have right now in crypto for traditional market. And traditional market can provide a lot of things that would fix the crypto, like liquidity, stability, and different things, and RWAs, so we can mingle different types of assets, not only crypto to crypto. So that's why. And another beautiful topic, tokenization. Everyone in the crypto thinks that tokenization is a beautiful concept, it's a new concept, and we will rediscover that. It's a bullshit. Like, this has been with us for years, in the financial market for years. And the name of that was, is there anyone in the crowd that knows? No, securitization. So shares as well, because shares are portions of something. But securitization was the name in traditional finances that was meaning to change something into pieces. And this is what happened. The securitization killed the market in 2008, as I told you before. Like, they were packing mortgages into securitized assets, and those assets they were provided later on to the organizations, people, etc., etc. So tokenization is a new concept. While speaking to bankers, I'm always saying that tokenization is securitization 2.0. And they are like, click, okay? You got my attention, Pavel, because they know how much money they made in 2007, 6, and 5 on doing this. And after that, they killed the whole economy worldwide, but yeah, that's another story. So what is tokenization giving us? And it's what kind of things? It's fixing that securitization was breaking. Liquidity. So, as you've seen in the Big Short, Michael Burry was signing a big pile of papers to buy CDOs, which were securitized, not securitized mortgages, which was basically an insurance on the banking market to collapse and the housing market to collapse. So the same thing was with securitized asset and mortgages. So you had to sign a pile of papers. This is a liquid asset. I can put it into my drawer. I can sell it to Benedetto, but there is no market and liquidity, so I can share it like global. With tokenization, I can buy 0.1701 portion of that asset and sell it to anyone without a need to be in my bank or anywhere, without a silos, because every bank had their own asset and they had those silos. So you cannot sell to the user of a bank B the asset that was issued by the bank A. Why? Because they are not integrated. Try to integrate everyone with everyone. It's not going to happen. But blockchain is solving this problem because it's a universal underlying layer to exchange any type of digital assets. So we can put it in there. First problem that RWAs are solving. Second, accessibility. This is what I said. Securitized mortgages. Who had access to that? Institutions. No one else. Right now, with tokenization, everyone can have access. I can give it away to everyone, as I have this on my wallet. And this is another thing, ownership, because I'm owner of that. and I can provide this to someone. So at the end, the bank, if I'm owner of that, and this is the previous example that I gave you, the bank cannot touch my money without my consent. So that's going to be something that in the future is, in my opinion, going to change the financial world. That's why those two worlds need to coexist together and benefit from the solution of it, that they discovered each other. And the last thing is trust. In the crypto, no one trusts anyone. In the financial market, no one trusts anyone. In general, no one trusts anyone. So if I have an ownership, accessibility, and liquidity, I have trust to myself because it's mine. And this is what crypto is solving. Right now, if you have money in your bank, who is an owner of that money? You? No, bullshit. They can block it anytime they want. You are leasing your capital from your bank. This is leasing because they make money also on top of that. So we are paying percentage, which is called inflation. So that's your pay. Challenges and solutions, of course. There are challenges, but lucky us, there are always some sort of solutions. So challenges that we might spot in here is that the regulations are not in here. This is the discussion we had before with you. So we don't know what's going to happen. We don't know what's going to happen in the US. I had a call with SEC commissioner like, I don't know, a couple of weeks ago. This girl is also Polish. And she said that probably the classification is going to be very similar to what's in MiCA. But she don't know. So operating with such a RWAs in states might be a challenging thing because at the end you might be illegal and they will, you know, check what you were doing back in like last year and you might have a problem. So that's one thing. And the second challenge is you don't know yet because there are no clear rules how your RWA tokens are going to be classified. This is the most important thing from all of those things. You can be classified under the MiCA, and you can be classified under the financial law. This is something that no one wants, because we are going to be done if they will classify as a securities. It's all the burden from the financial market. So then there is MiCA. MiCA have a couple of different classifications, but it's not there yet. It's in the European Union, and there is a huge portion of the world that is not named Europe. So those are the things and the places where we don't know how to operate yet. So classification of your asset is a challenge. But lucky us, there are some things on the horizon that are giving us some brief understanding how it might look in the future. And MiCA is one of those things. Because a lot of countries will look on the implementation of MiCA and the successes it's going to bring, if it's going to solve the problems that are really in here. So those are our solutions. So I will heavily, personally, rely on what we have in here, because this is something solid. This is something I can read. This is something I can ask people that are working on that law and about their opinions. And this is something that I can extrapolate for future. So this is the only thing that left me right now. But that's a bright thing in the tunnel, and it's not the train. So that's good. Practical applications of RWA in DeFi. Probably this slide is not necessary because we have been discussing during this conversation like probably 50 different ideas. But I will give you some case studies. So Dictator, and those are super non-obvious ones. Like those are RWAs that you would never think of that it's possible. Do you know alcohol brand Dictator? Okay, they produce rum for over 120 years in Colombia. This is very good alcohol, by the way. So you can buy it in any bar worldwide. And they have this investment alcohol, 100-year-old bottle, 150-year-old barrel, and they sell it in form of NFTs in that case. Why? Very easy. If I will buy a 100 grand bottle of alcohol, which is investment alcohol, which should gain 20%, 15% a year, do I know how to store this fragile asset properly? No. But those guys are doing this for 120 years. They know how to do so. So I'm buying a certificate of ownership, which I can burn anytime, and they will send it to me. And this is a trusted third party. I can trust them because they are doing this for 120 years, so probably this is a good idea. And second issue, they are solving by using blockchain to that, to tokenization of this kind of RWAs that are, bringing you a real yield, is secondary market. How simple is it to sell the token instead of bringing a bottle? But it's better. It gets better. tried to sell alcohol in Dubai. It's haram. It's forbidden. 11 years in prison. There are 2 companies in Dubai that have license to sell alcohol. You can't. But you can sell anything. Always. So it simplifies the secondary market a lot. And this is interesting part. Another one is Lofty and Propi. So those are 2 companies, super interesting ones, because they are tokenizing real estate. And the problem of real estate and tokenization is that 99% of the companies that were doing this in crypto were doing this wrong. Why? Because they had asset which was backed by promise that it is valued based on the real estate. And there was a company who is owner of this real estate. And there was no legal binding between the token, the real estate, and the yield generated from the rental. And those 2 guys, those 2 companies solved that. One is a US one, and this one is Algorand. So we have Algorand touch during that conversation. So this is Algorand, and it's a really interesting company. Falcon, yeah, it's us. So that's why I changed the background. So Falcon is a hedge fund, tokenized hedge fund. So we are tokenizing basically the results of the hedge fund onto the market. We are providing this in form of RWA tokens to different loan protocols and in general to the people. Agro token, grains. They produce grains and they sell grains in a tokenized form. So you can invest into the results of the field that they are owner of, and they provide the real yield on the sale of those grains. And they have interesting track record. You can read about them. This is also Algorand project. Opus, Meld, and the future. The future is not the project. It's the statement that I have to say. So my belief is that RWAs are the most important thing in development of the future of crypto, are the most important things in expansion of the crypto to traditional market, and are most important things to increase adoption. So the next time we meet, all of us are going to be here, but also thousands of new people are going to be here, not only us. So I can meet new people, not only Andrzej or you or any one of you, once again, but also new people, because that's our problem right now, that you need to understand what the MetaMask is, gas fee, and other things. So I believe RWAs might help us because the institutions will provide crypto solutions, and they'll provide, of course, through custody, but half of the crypto is custodian based also. So that might help a lot to provide a new capital and new people and a make expansion, which will stabilize the market as we had conversation before. And one of the last statements, if any one of you have any kind of idea in your head, start now. Probably you think your idea is unique. Bullshit. Why? Because probably there are 1,000 people worldwide who have very same idea. But the key is not an idea, it's an execution. So try, fail, repeat, and fix. And start now, because otherwise someone will be in front of you. And at the end, I would like to quote my favorite scientist, Nikola Tesla, which is applying to the current state of the crypto market and where we all builders are right now. Let the future tell the truth and evaluate each one according to his work and accomplishments. The present is theirs. The future, for which we have really worked, is ours. Thank you very much. My name is Paweł. Questions?
Can you tell a little bit more about MELT? Is it this banking protocol?
Yes. This is a banking protocol, and they are aiming to provide different types of assets as well. And they want to provide some sort of banking experience in the crypto. So this is much wider idea than just one protocol relying on one type of asset. This is like much wider thing. And they want also to work with a lot of RWAs to provide them within the regulated entity within the custody as well. Like
a Swiss project or European?
That's a good question. I haven't checked. So I need to check because I don't remember where they have placed.
Is the Algorand one?
Melt is also operating. They have integrated Algorand things as well.
So it's the one that makes gold, silver.
Yeah.
So it's Australia.
Australia.
But
I don't have sweets. I don't have sweets.
I don't think so. It's,
I see the main issue with melt gold that you cannot take the gold from it.
So the problem, like not a problem, like is the friction that you have in such protocol is that the way to on and off ramp is not that fast as the way you can trade on DEX, for example. So how do you secure the price, you know, like, and the liquidation if it's on DeFi? So this is a whole thing.
Yeah. And the thing, because you said that you cannot withdraw gold,
something else.
but it's
different.
you thought that you cannot withdraw gold. But if you are buying contracts for oil, in most cases those contracts for oil will not provide you oil. If no one will bring you a bar, or unless you buy contracts with physical.
Yeah, but
you know,
if you have a warehouse, you can tokenize what's inside the warehouse.
Yeah, but it depends on how protocol is operating. If this is a protocol that is providing you a physical.
But I don't trust the protocol that doesn't allow me to take the assets.
So then Melt is not a project for you, probably. I would say.
No,
so
we found that Melt Gold and Melt is two different projects.
Ah, okay. So we were talking about something else.
Yeah.
Any other questions?
It's possible to tokenize technology.
Yes, and I've seen that. There's, I don't remember the company, but they are trying. They are building technology, and they provide the license in form of tokenized, in form of, let's say, RWA, but a whole company, like no company, technology they build. So you have rights to code. It's legally binded that you have rights, and the way you make money is they are licensing this code because it's license based. So it's not, there is no MIT license, so everyone can use it. It's not open source. They provide those libraries to solve certain problems, and they are, by selling those assets, they provide APR to the people. That's their idea. They haven't started. They are working on that, but we're gonna see if they're gonna succeed. So there are some tries around that, and this is also a like Polish Czech project. Something else? Bring it on.
You mentioned the dictator investment alcohol, right?
Yeah.
Let's say they have the NFT, they've tokenized it on chain, and they buy that, and they decide not to pay. Let's say I'm in a completely different country than they are, and if I did buy that investment contract in their country, I would be protected by a legal power in that country. From whoever made that security, right? But in another country, they could tell me they'd sell me a token, and they could inflate the amount that they have. They could be basically selling me fake amounts of alcohol that don't exist actually in the real world. So how would that work? The entire fate is in the
third party in that case.
Yes. So the person that creates tokens, right?
Yes.
Is it the person that also owns the product?
I haven't heard the portion because of the product side, but I'll try. I will extrapolate probably, and I think I understood you. So the first thing is that you need to trust the third party. The second thing is they are not paying any fee. Just the alcohol is valued every year higher because it's old and it's very rare. It's not common to find a 100-year-old bottle of alcohol that has been produced in Colombia like a long time ago and it still exists. Haven't been drunk by pirates or something, you know. So that's one thing. The second thing is, the third thing is, if someone is selling to you, you need to do your job and verify if this is something that is not fake. So we have, let's say.
It would be impossible for me to check if the amount of bottles that they are selling is the exact amount they have.
I thought you are asking if someone who is selling you the token on the secondary market, if he's selling you not the fake.
I mean the distributor.
Okay, so there is an audit. They provide quarterly information about their storage, what they have, etc., etc. And you can always ask and contact them about your thing that they sold to you. They are doing this for 120 years, and you know, investors, big investors, very wealthy people from Japan, Asia, States, etc., are buying all the time. So this is, again, you cannot verify that, The same way you cannot verify Fed if Fed have enough gold or Pax Gold have enough gold. They say so, but you cannot go there and check. Say, hey, let me count all this gold that you have in the basement. So it's the same in here. You need to have trust to the third party, and that's why those regulations are so crucial. So they can't fool you, and if someone will do something bad for you, you always have legal options to get this right.
It's inherently more risky at the moment than getting an actual security from a bank.
What is yes, and I will ask you another question. How you will check if the DeFi protocol where you are putting the money is not hackable or someone will not do the ripple?
I'm technical. I can check the smart contracts.
You can check the smart contract, but the question is if you are able to check the economic attacks that are possible there and verify everything. Like for Luna, it just required $2 billion to kill the market. It was not a technical attack; it was economic attack. So.
Yeah, very interesting discussion.
It's done.
You can probably continue later on or after party. Thanks.
Thank you very much.